How's it going, everybody? This is Tucker Sutton here at Black Box, doing our weekly Monday TA stream. We'll be going through some technicals and looking at the market, getting everybody ready for the FOMC meeting this Wednesday. But yeah, we're going to be doing this every Monday, just doing a quick deep dive into what we're looking at, some levels, some metrics, and just looking to chat with you guys and have a good time. So without further ado, we'll get into it here. We're going to start out on the total chart. This is the total crypto market cap. As we can kind of see, we've been in a pretty hefty downtrend over the last basically year. We're down about 65% from all-time highs, which is pretty usual for any bear market. Back in 2018, I guess, went down about 80%. So I guess that is kind of what I wanted to touch on a decent bit this stream. Is that we really could be at a bottom, but my inclination is that we are not. Some people are calling this capitulation over here. This candle, about a 30% candle. But with some of the metrics we're looking at, we're talking about, running ROI and a lot of the on-chain MVRV Z-score, and a lot of that stuff suggests that we might not actually be at the bottom yet. So we'll get into that a little more in a bit, but just wanted to go through some levels here. Let's see. Okay, I'll take these lines off. So this is the 200-week moving average. Historically, for the total market cap, total crypto cap, we've seen it bounce off this level a few times, right? We saw this market bottom, bounced, this market bottom, bounced. We thought maybe this was market bottom. We were getting the bounce. We've since come back under this moving average, and just the other day, or just last week, we did close this big green candle above it, which was encouraging. But again, my inclination is to fade this rally and consider this another counter trend or bear market rally. So we'll see what happens, and this is a very, very important week for the rest of Q4. But Powell does have a lot of power over this market, and so we'll see where we go from here. But I would consider this chart neutral to bearish. I'll pull out one more indicator. This is Market Cipher, created by CryptoFace. So as we see here, usually when you see this kind of stuff, you see this, you see momentum moving to the upside. It's usually a positive thing. We're seeing money flow kind of start to curl, but it's not quite there yet. Again, this is a pretty high time frame. This is a weekly time frame, so these things do take a while to play out. But usually when you get that higher low and momentum, it is a good time to get long. I wouldn't say we're necessarily there yet. Like if I go look at the 2-week, we do possibly need to see some red money flow before we get some sort of sustained bull market like that. So that's kind of where we sit with total. We'll go look at Bitcoin on more of a macro scale. Apologize if this chart is a bit busy, but so what we got here, we got the 200-week, and we have the bull market support band with a little forecast. Again, we see this thing hold as support here and then go up, hold as support here, go up. We completely lost it. We went, pretty deep underneath it here. and have been trading underneath it since like June. We kind of got back above it here with a fake out, dump back down. Right now, and something that somebody that I have been watching and listening to has pointed out is the bull market support band has come to price, not the other way around, really. I mean, I guess we got a little up thrust here, but this band came to price and not really the other way around. So kind of when we see this happen, we tend to want to look at something like this, right? Where price went sideways for so long that this support band of the 20-week SMA and the 21-week EMA, converged to price. And we saw all these tests of it sell off, all these rallies sell off, right? The biggest one we saw was here. We didn't really test it here. We got a little bit closer here, but now the band has come to price. And if we want to see, not if we want, but if we see something similar to 2018 play out, we'd expect this, essentially. Now, I'm not saying that's necessarily what's going to happen. A lot of people are looking at this fractal and saying that's what's going to happen. So that usually means it's not going to happen. Usually the crowd is not always correct. But for the bear case, I would say the melt up crowd and the hyper permabull crowd are getting pretty loud, especially on Twitter. So that kind of tells me that the top of this recent rally for equities and crypto may be in. It's not 100% confirmed yet, and we can go look at some lower time frames to see if there is any credence to that. But so here we got Bitcoin on the 12-hour, right? This is the volume profile of the whole range. This red line is the point of control. This is the value area high. We didn't really make it up to there. got kind of close, but didn't make it. We're getting a little toppy here, I think. Usually these kind of patterns play out like this, but excuse me. We'll see what happens. I mean, I look at Market Cipher and I see this money flow is kind of starting to dwindle. This is, the momentum wants to come down. RSI and stock is pointed down. VWAP's pointed down. I mean, obviously we're getting that down move, right? We're getting that candle down, but there may be, a bigger move at play. And this is the 12-hour, so it is going to take a little time to play out. But if we go a little lower time frame, let's see. I mean, this looks like a head and shoulders on the momentum waves with money flow coming out. So that's pretty bearish in my opinion. If you haven't noticed, I'm a bear right now. We've been bearish here at Black Box for a while. We actually hedged and sold a lot of our positions right about here when we saw this move up to 48K, because on the daily, I believe it was, that is where we rejected the 200-day, if I can remember correctly. I'm not 100% sure. Let's see. Yes, that is where we rejected the 200-day. Yeah, so when we saw this right here, this was the time to exit, because that was going to ensue. If we knew if we couldn't get back above this blue line, this 200 SMA on the daily, we were gonna reject pretty hard. So that was definitely a good place to exit. But we've been bearish for most of the year, held a lot of cash, but anyways, yeah, this thing I believe wants to come down. We're getting a red dot on the daily. We're getting this VWAP coming down, money flow coming down. RSI is pointing down. Another thing to note with Market Cipher, I know not everybody has Market Cipher, but it is relevant for this. Another thing to note is when these this RSI and the stock RSI splits like this, and we get this big gap in them right here, that signifies that it is a weakening move, in my experience. So, you know, this, again, more evidence to point to a bear market rally, in my opinion. Let's go look at ETH real quick. We did not get the hammer that I had put there, unfortunately. Well, we did, but we came back and blew right through it. But here we go. On ETH, we have a couple golden pockets here. We haven't traded up into this one yet. I would expect a lot of resistance if we get up into this region. We did get above the point of control, but we have traded back underneath it right now, about 1560. I guess there's a couple cases to be made. I mean, the bulls would say this is a pretty strong uptrend right now with higher lows here. You know, I would say it's looking a little toppy. Again, we're kind of seeing this play out. You know, we can maybe get one more and then at least come test here and then maybe do one of these. You know, something like that. Depending on, you know, all this kind of gets thrown out the window depending on what Powell says. I don't want to say that it's not relevant, but, you know, what the Fed does has a massive impact on markets and especially risk assets like crypto. So we'll have to see what happens. But I would expect him to be pretty hawkish, honestly. You know, I think if we pump into FOMC, it's going to be very easy for him to shut the market down and kind of do what he did when Jackson Hole, when that conference happened. Everybody kind of misheard him in the meeting prior and thought he was pivoting, and you know he had to set that straight and send the market down with his Jackson Hole conference. But so yeah, I mean, I don't think inflation's coming down in a meaningful way, which means I don't think the Fed has much room to be dovish yet. You know, I've seen a lot of people on YouTube and Twitter, and everybody's talking about a pivot and when it's going to come, and you know, everybody's saying like the Fed has to pivot because they're incurring so much interest expense on the debt they owe. That they're not going to be able to pay it off, and yeah, basically they're going to be forced to pivot. Also because you know they're increasing the strength of the dollar, which is just demolishing Japan and emerging markets, and a lot of other countries' currencies are getting completely destroyed by the dollar right now, as are assets. So that might be a good segue, actually, into the United States Dollar Index, the DXY, the wrecking ball of 2022. I was seeing a lot of people on Twitter doing something. Where is it? I'm not sure where it is, but they were drawing this parabola, basically, right? They were drawing this parabola like this, and they were like, oh my God, it's broken down. The dollar's coming down, like, risk asset, risk on time. Let's go, everybody, right? Didn't happen. Immediately kept going higher, right? I mean, let's go to the Heikkens real quick. This is a strong uptrend, right? This is the weekly. We're expected to get a little red every once in a while, here and here and here, and what happens every time after that? Just The dollar is chatting right now. The dollar is the giga chat right now. So I wouldn't expect this trend to change anytime soon. I mean, we can even, oh my God. We can even look at market cipher with this. This money flow really just blew me away. Yeah, I mean, until we see this start coming down in a meaningful way and see, lower highs starting to print, do something like that, and if money flow started doing something like that, and VWAP kind of did this, and then we could maybe get a little more risk on. But until we see some meaningful action in that arena, in this dollar, then I think all these rallies are going to be sold into. Let's see. So yeah, I drew a couple golden pockets here. This is the dollar on the weekly, so this is a pretty macro time frame. But yeah, this is probably the next area I would target at around 119. All-time high is 160. Wow, I didn't realize it was that high. But yeah, I would target this 119 area next before a pullback. If we get some kind of formation like this, where we get 3 hits to the high drop, we get a higher high, and then a slightly lower high, I would maybe look for a pullback. But I would not be, trying to fight the Fed, and trying to fight this trend right now is not in anyone's best interest, I don't think. So that's the dollar. What else are we going to talk about? Let's do ES. Yeah, let's do ES. So, what do we have here? All right, so we marked out some levels from a while ago. We've got pre-COVID highs. We've got a couple, what is this? Equal lows, I believe. Relatively equal lows, not completely equal. This golden pocket is drawn from the high to, I believe, the COVID low, possibly. Yeah, COVID low to the all-time high. We're in the golden pocket right now. We held support here, got a bounce, broke right through it, consolidated, got a bounce, broke through it, resistance. Now we're back at it, right? And we're getting that reaction right where we'd expect it. Right at the top of the golden pocket. This trend line I just took, I guess it's not 100% accurate, but let's see what we can do here. Right there, maybe. Yeah, I mean, I would expect us to continue putting in lower highs, maybe something like that. I mean, it doesn't have to get all the way up to 4,100. That's if we went there like tomorrow, basically. I guess that's not tomorrow. That's mid-November. Yeah, we could do something like that, or we could do something like steps. What am I trying to say? Just step our way up to it. What am I doing here? But either way, I think the top of this move is probably capped around 4,100, 4K area. I mean, we could even take another fib from that swing high to that swing low. Yeah, we get another golden pocket right at 4,000. So I think 4,000 is definitely the level to watch. I would be personally adding shorts there. Because I think the macro trend is down, and that's pretty evident. Something that is kind of fun to do is to take this and invert it and say, is this bullish or bearish, right? Like, does this look like a retest? Does this look like it's going to bounce? Does it break through? Like, I would expect, this looks like a healthy uptrend on an inverted scale, right? I mean, this clearly higher highs and higher lows, and I guess the market cipher doesn't actually invert, but what did we see here? We saw kind of a head and shoulders on market cipher B. We got the bounce right there. On the daily, we're not quite topping out yet. RSI and stock are still pretty tight. Money flow is pretty neutral. Can't even see it on that time frame. Okay, yeah. See, this is a little more bullish. This right here is a little more bullish. We are getting a gap up in here. This is looking to turn down. So, it is a difficult market to trade right now. I'm not gonna sugarcoat it or anything, but I would look to short from higher is my ideal trade in this environment. I wouldn't be looking to long this necessarily unless you want to take on some sort of, beta. Like if you want to play Dogecoin, that's totally fine. You can make some money. I mean, it doubled last week, but yeah, I mean, I think the upside is capped at a few. Let's see what. Oh, I did not mean to do that. Upside probably capped at 6% on the SPX, right? So yeah, if you want to play beta and you want to, run some crypto to catch that bounce, which will probably be more like, 20% if we look at like some of these altcoins, like this is Chainlink right here. Pretty good support from that box. I mean, could we see 950? 20% on a 6% ES bounce? We could. I would say that's definitely possible. But, I would probably be looking to add short exposure up here also. So, yeah, betas are definitely in play. But macro trend is down, and I definitely am not going to be trying to play any FOMC speculation. We're definitely going to get, back to Bitcoin. We're probably going to get some scam wicks up and down on that day. So it kind of depends. Like if we dump really hard into FOMC, I would maybe expect spike up, spike down, and then maybe trend up a little. But if we're pumping hard into it and people are expecting a pivot or expecting dovish language, and they're like, the melt up people are getting loud and the stock market's going up, like I fully expect Powell to shut it down. I fully expect him to kind of force risk assets to roll over. So let's look at just a couple more things here. All right, we got the US 10-year, which is very important actually. What are we on? The daily. Let's go to the weekly. All right. Yeah, so clearly this thing has been absolutely ripping this year. This is the yield, by the way. This implies the bonds are selling off hard, which they have been. This is the volatility index of the US 10-year, right? And it like this box down here that I drew is, I wonder what time frame I drew it on, honestly. Maybe I drew it on the daily. Excuse me. Yeah. This box is where volatility wants to be on the 10-year. If we want asset prices to do well. When there's this much volatility in the 10-year market, in the bond market period, risk assets are not going to do well. Simply because the safe haven that is bonds is no longer a safe haven, basically, right? And so when we see this behavior up here, this, I wouldn't even call it deviation. I mean, this is just a new trend, basically, outside of the norm. People are going to get scared. People don't want to see these kinds of crazy spikes and this crazy volatility in the bond market. The bond market is not supposed to act like that. And there's, a host of reasons why, and a lot of speculation on why and what the Fed's doing with their liquidity and with their repo operations, and there's tons of speculation out there as to why the 10-year is acting the way it is. And I'm not going to LARP as a macro global economist, right? That's just not it's not what I do. But I do believe I'm smart enough to have some sort of opinion, and I do read and watch enough stuff to kind of know what's going on. So this is definitely important to watch. We just want volatility here to calm down, for the yield to come down, people will start getting back into bonds. And then they'll eventually start getting back into equities, and then crypto, and then just continues down the risk curve, right? This is kind of the point, right? Like, if they're not going to get in bonds, if this yield's going to spike and these bonds are going to sell off and this volatility is going to stay where it is, then crypto and equities are probably not going to do very well, as long as the trend continues. So let's see here. I'm sorry, I keep coughing. I'm kind of sick right now, I'm not going to lie. Yeah, I mean, this thing looks like the dollar, basically. I mean, it's just chatting all year, just been flying. This is something where it's like, yeah, dips are for buying, aka rises in the US 10-year bond are for selling. So, and risk assets in general. So that's the 10-year. I believe the 2-year looks pretty similar, so I'm not gonna chart that. This is the VIX. I don't love charting the VIX, if I'm being honest. I mean, we'll see where this goes right now. I mean, we are kind of seeing higher lows. I mean, I maybe would expect it to test this 200 before we see a move up. This line I drew, what I have noticed is if you plot like, let's see, like, yes, new price scale, yeah. So let's take off this thing. Yeah, okay. Yeah, so I mean, when the VIX gets above 46, right, minimum 46, it's a good time to buy the dip, right? It's a good time to get involved, right? I mean, when it crossed 46 in '08, I mean, we had, I don't know if this is going to be accurate. Oh, what's this date? We'll just figure that out. Monday the 6th, Feb 9. 29 September. All right, 29 September to Feb 9. All right, 29 September to Feb 9. Let's see. Okay, never mind. We're not going to do that. Basically, point is, right, dips are for buying when the VIX is above 46. Obviously, if you bought right when this crossed 46 in '08, you would have lost some money in the next 6 months, basically. But, you hold that for a while and you're up hundreds of percent. So, where are we at now, right? We're at 25. So I'm not convinced that a global bottom is in with, all of the global economic and macro factors that are involved, right? You've got the war in Ukraine, you've got energy crisis in Europe, you've got China looking to invade Taiwan. Don't know if that's going to happen or not, but that would really be painful. But you've got all this going on, and if you're going to tell me that the stock market bottomed at 3,500 with the VIX at 34, you're out of your mind, right? Like, that, there's no way. Yeah, there's no way. So that adds to my bear case. Just adding to the old bear case, right? We'll leave that. All right. Couple more. Let's see. ETH, Bitcoin. These are a few golden pockets drawn from some different swing highs to swing lows. Found support here, resistance, right? This is a big level. 0.86 is a big level, right? If we can crack above this, we could maybe target higher, but in the environment we're in, alts do usually bleed pretty hard against Bitcoin and against the US dollar, but in this case against Bitcoin. So, over this recent rally we've had, right, we've seen ETH kind of rip and Bitcoin, did all right. So that is the reason for this move up in the ETH Bitcoin ratio. We're on the weekly. Let's go down to the daily. Yeah, we're seeing money flow roll over. We got the red dot, meaning VWAP has crossed down. We also saw on this move up a huge gap between RSI and stock RSI. So, a little longer, next few weeks, I would expect it to come down, lower time frames, right? I mean, even that looks like it wants to come down, right? We're seeing like momentum coming down, money flow turning over, VWAP coming down, these moving tight to the downside, right? I mean, this thing definitely, I would look at a retest of 0.7 at least. Let's go even, oh God, those look bad. Let's get rid of those. All right. First, we'll probably target some of these equal highs. This is a real thin move, right? A lot of these single prints are probably going to get filled. Little Bart Simpson action there. But yeah, I would definitely expect this thing to roll over for sure. In the coming weeks probably, but we're gonna need Bitcoin to dump to do that, so we'll be on the lookout for that. All right, last one, Bitcoin dominance. And I know this isn't the best chart, this isn't the best representation of Bitcoin dominance, because it does include stablecoins. I couldn't remember how to get it to exclude stablecoins, but we'll check it out anyways. So I don't know why it's on the 4-day. Weekly, Heikin Ashi candles. We're getting a higher low. It's not, I want it to look more bullish than it is where I'm coming from with this one. I want to target this 47% level. I know that Bitcoin, excluding stablecoins, is around 47% dominance. So yeah, obviously this is a little bit lower because a lot of the dominance is taken up by USDC and USDT. But I want to see this move up, and we can get that either on a big Bitcoin pump day or a dump. It would be nice to kind of see Bitcoin pump and knock a lot of these alts off their support levels, and then maybe dump and they just free fall, and then they're there to scoop them up. But yeah, that's kind of where we sit. So I'm gonna go ahead and end it here. That's kind of a brief overview of what we're looking at this week. So yeah, we'll see you guys next time. I have not looked at the chat at all, so I don't know if you guys have said anything, but we'll post a replay and we'll get after it next week. All right, see you guys.